Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking again about GNOG. Now after my previous video where I called for patience and said that the lack of videos was due to not too many updates to talk about that are video worthy, I did not expect to be posting about GNOG again this quickly. However, we have news and it's big. GNOG announced on Monday this week that it was being acquired by DraftKings. At market open on Monday, GNOG jumped up in share price. But in this video, we'll explore everything that we need to know about the acquisition of GNOG by DraftKings and what I personally am going to be doing here. We'll also in this video touch on some really important things which I haven't seen anyone else talk about, including some analysis, but this is really important overall. So if you're invested or just interested in GNOG, then this is not one that you want to miss. Before we get into the video, please smash the like button. It's so helpful in our battle against clickbait content on investing YouTube, and it's helpful in letting the algorithm know that it doesn't only need to push clickbaity kinds of videos. It's also massively helpful to the channel, and so it's really appreciated. If you're new to the channel, then make sure you're subscribed. If you want to see more content, then check out the Patreon group. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So earlier this week, GNOG announced that it had accepted an acquisition offer from DraftKings. This deal is structured as an all-share deal. This means that shareholders in Golden Nugget Online Gaming will receive 0.365 shares in DraftKings. So if you have 1,000 GNOG shares, you will in effect exchange these for 365 DraftKings shares. Very quickly digressing, this deal could have been structured in several ways. You can have all cash deals where the shareholders receive an entire cash amount for their stock, or alternatively you can have a mix of cash and stock. This is an all-share deal, so as the valuation for GNOG is entirely based on the share price of DraftKings stock, the actual value to investors in GNOG fluctuates with changes in DraftKings stock price. Clearly, a cash deal gives investors certainty over value. However, it does not, in a way that a stock deal does, give the investor the option to remain invested in the combined group. Personally, as somebody who is bullish on the US gaming market growth over the coming years, this is a positive for me. It gives me the optionality of how to play this, and exactly what I'm going to do, I will come on to shortly. So looking at the deal itself, it values GNOG at $1.56 billion. This is on the basis of DraftKings' closing stock price on August 6th of $51.59. This means that if DraftKings' stock price increases above this level, the value to GNOG becomes greater, and the inverse is true as well. If the stock price for DraftKings falls below that level, the value that GNOG investors receives decreases. The offer from DraftKings implies a stock price for GNOG of $18.83, which is a 51% premium on the 60-day volume-weighted average price for GNOG. Now, what is important to remember here is that this actually sits below the all-time high for GNOG, which is actually around $26 in late December. Clearly, that was pre-completion of the merger, where the stock was actually still LCA. However, there are some investors who may still be underwater at this level of offer, and clearly that plays an important consideration for some investors to decide what they're going to do here. The deal is expected to close in Q1 2022, and GNOG shareholders will hold 6.6% of the combined group. Importantly, 40% shareholder in GNOG, Tilman Fertitta, will assume a board position with DraftKings, and more importantly, he will also be subject to a lock-up period for 1 year on his investment in GNOG, meaning that he is unable to sell any of his shareholding once it converts into DraftKings stock for a period of 1 year from the point which the transaction closes, meaning he will be invested in this deal until the very earliest at 2023. Having Tilman Fertitta as a member on the board, as well as having agreements in place to ensure that the combined business can benefit from his other business interests is also important. Most specifically, his brick and mortar businesses in the Landry's group, consisting of physical casinos, 6 in total currently, with an additional one coming in 2022 in Illinois, as well as a range of restaurants from upscale options all the way through to casual dining options. He also owns the NBA team, the Houston Rockets, which also bring incremental benefits for the combined business, especially potential for the sportsbook here that currently exists within DraftKings. Now, taking a step back, understanding the combined business profile is essential when making a decision on whether to remain invested in the business post-deal. I'm assuming that by investing in GNOG or DraftKings, that you're bullish on the overall thesis of the online gaming opportunity in the US, so we're not going to spend time focusing on that. If you're undecided on this, then please check back on one of the many other videos on this channel in relation to GNOG where we covered this loads, and ultimately that thesis remains unchanged. Now, the acquisition of GNOG for DraftKings is massive. It really strengthens its position in the casino gaming market, complementing its already strong presence in the sportsbook side of the online gaming market. This is massive, and it adds to DraftKings' differentiators and positions it well to deliver its strategy and growth plan over the coming years. What's more is that there's also significant potential for synergies to be recognised here. Both revenue synergies, being able to generate more revenues through cross-sell and other strategic initiatives without incremental costs associated with their sales, as well as cost synergies, eliminating duplicated costs and leveraging the strengths within the combined business to become more efficient. This is important for investors because it drives up incremental value in the business. Now, this is where it gets a bit more technical, but also important. Stick with me because I will explain it as simply as possible and you will understand it by the end of this. The first thing is to think about the purchase price. This is an accretive deal for DraftKings. An accretive deal is one which creates shareholder value. Now, a very simple way of determining whether this is the case, when the majority of the consideration for a deal is paid in stock, is by doing the following. It's by comparing the valuation multiples of the target and the acquirer. In this case, the target, GNOG, is trading around 7.6 times its 2020 revenues, while comparing that to DraftKings, which is currently trading around 12.4 times the 2022 revenues. As DraftKings' multiple is higher than that of GNOG, and it's an entirely stock deal, you can assume on the basis of this that the deal is accretive, i.e. it's creating shareholder value. Now, this analysis is best done on an EBITDA multiple basis, but this is not possible given DraftKings' current financial profile. Said differently, the market values each dollar of revenue generated by GNOG less than it does for DraftKings. Now, that's good news for DraftKings, enabling it to buy incremental revenues less than its own revenues are currently valued at, creating shareholder value. Now, any synergies which the company generates from this deal are incremental to that value created here. Now, we know from the presentation that they expect to generate around $300 million in synergies at the EBITDA level at maturity. What this means is that once the deal has been fully integrated, after a number of years, the company believes that the combination of the two businesses will enable it to generate around $300 million more in EBITDA at the group level. Now, clearly this is massive, and for me what will be really interesting is to understand exactly how this is going to be delivered. Now, in the presentation they outline the key ways which this will be done, but it would be great to get a better feel and a sense for this, and more granular information around the numbers associated with it. Now, for context, $300 million is significantly more EBITDA than GNOG is currently generating. In reality, I think this is very, very optimistic, but even a fraction of that would generate massive value for shareholders. We know that GNOG generates EBITDA margins of around 17%. On this basis, the deal today is valuing GNOG at around 45 times its FY 2022 EBITDA. Taking this, and assuming that the company only generates 10% of those synergies, so $30 million, this would create an incremental $1.4 billion in value for the combined group. If they deliver the full $300 million in synergy, then clearly the value creation potential here is staggering. So, what should investors do now? Should you hold? Should you sell? What should you do? Well, as I always say, I'm not a financial advisor. Investing is very personal, and the decision that one person makes is not necessarily the right decision for another. Only you know what your personal circumstances are, and what your time horizons are, and what an appropriate allocation to any particular company or thesis would be. However, there are clearly three options available to investors now. Firstly, a full exit, where you would sell your entire stake in GNOG, either now or depending on how you see DraftKings performing over the coming months, at some point during that period before the completion of the acquisition. Now, we know that GNOG is reporting results later this week, and we know that that could be good news should the company post a positive set of results. Now, the second option available to investors is a partial exit, i.e. selling some of your portion of your investment in GNOG now, again at some point over the coming months depending on your expectation of the market performance for DraftKings. This means that you're able to somewhat de-risk your initial position while maintaining some exposure to the future strategy and the value creation opportunity which is here. Now, the final option available to investors is to not sell any of your position, instead remaining fully committed to the stock and the long-term potential which the combined business has. And by doing this, you have to accept that this may take many months or maybe even years to fully realise its potential. As I've already said, only you can make the right decision for yourself. Nobody has a crystal ball, nobody knows what's going to happen, and do not take what you've seen in other videos or posts online or whatever you've seen as gospel. My personal position here is that I will assess the stock price of GNOG over the course of the coming weeks, especially focusing on the earnings coming out on Thursday, August 12th, and how this impacts the stock price. Now, my position is unique. I will seek to exit around 10 to 30% of my position in GNOG on this basis. I should add here that the reason for this is that I already have an investment in DraftKings, and so the combination of the two businesses leaves me with a greater degree of concentration than I typically like within one certain company or one specific trend that I'm investing into. Said differently, my specific portfolio to play the US online gaming investment thesis which I have will have too much concentration in the combined business of DraftKings and GNOG, and so ultimately I need to seek to reallocate this slightly. Ultimately, I'm still very bullish on the sector and on the trends and on the dynamics, and I do believe this is a great deal and that the stock price performance should be favourable from here. hence holding the majority of my original investment. If I did not have the existing DraftKings exposure, I would retain my entire investment, but practicing portfolio management strategies is an important part of ensuring consistent, market-beating returns across your investing portfolio and over time. So ultimately, that is the drive for my decision. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed. If you want to see more content, then check out the Patreon group. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.